Alright, so in this video, I'm gonna be going over supply and demand zones. So I went over supply and demand zones. Well, supply and demand is just like another term for zones, but I went over supply and demand in the last video. But I'm just gonna be going over. I'm gonna be doing a 2.0 version. So pretty much, I'm gonna be going more into the little details of it. So, because in the last video, I just showed you guys like how to draw them, etc. But now I'm going over like more into depth of like how to incorporate them with the high time frame versus the lower time frames, knowing which time frame to look at for specific zones and knowing which are important and why. So I've gotten a lot of questions like, oh, am I drawing my zones right? Am I doing this right? It all depends. It all varies. Not everyone's gonna draw this perfectly, of course. I don't draw perfectly. Zones are not meant to be drawn perfectly. It's meant to show you where your support is and where your resistance is, or where your supply and where your demand is. That's what it's used for. But it's not. Nothing is ever drawn perfectly because we don't know what perfect is in the forex market. It's just all random. So let's get into it. Pretty much. So finding the difference between high time frame zones versus low time frame zones. What this means is you guys probably ask me all the time, what time frame do you trade on? Well, I usually trade on the like I trade on any single time frame, like every single time frame I trade on once, right? So I'll be looking at the daily. Let's say the daily's bullish. So let's say the daily's like looking like this, bullish, right? Now if I go on like a smaller time frame, let's say you go on a 4 hour candle now. So in a 4 hour candle, how many 4 hour candles are in a day? There's 6 4 hour candles, right? So there's one at 1, one at 4, I mean one at 5, and one at 9, 159, right? So well, that's Eastern time zone. So yeah, 159 Eastern. So let's say you have this is the daily, and then for example, obviously for the 4 hour you get like something like this probably. No, and then yeah, like something like this probably. This is how the 4 hour look. After going to 1 hour, it just breaks. So then now there's like how many 1 hour candles in the 4 hour candle? There's probably like or four of them in a 1 hour candle, four of them in a 4 hour candle. So then do times that by four. 4 8 12, 60, so 32. Yeah, 32 candles within 32 1 hour candles within 4 4 hour candles, right? So um hold on. Yeah, so you have my bad, not 32. You have 16 of them, right? So 16 4 hour candles, so you have 4 8 12 16. No, I was just saying 32, but yeah, you have 32 16 of them. Um And then obviously if you're going down to a small time frame, how many 30-minute candles are there in an hour? Then you're gonna have like probably two 30-minute candles in an hour, and after now you're gonna see how many 15-minute candles are in an hour. There's 15-minute candles, so you gotta break it down. You gotta break it down in depth, right? And I always break my trades down in depth when I'm on a live streams. And like a lot of you guys have difficult doing it. I can see why. It's a little more complex. It takes a lot of back testing. But once you start to practice it, you'll start to realize how do y'all incorporate together. So finding the difference between high time and low time frame zones. So pretty much like let's say like on how do I put this on a say you have a zone like this. Say you have some bullish move, bullish move, bullish move, and then you have resistance being made here. Then you have a bearish candle coming down. So let's say you have this, right? So uh, let's say you have this now. So now you have a supply zone here, a resistance here, and then now you have a support being made because obviously you had a bullish push, now you have the pullback. Now this would be your range. So if the daily candle is bullish, I think I should I want to take this to a different screen because this is a little confusing the way it looks right now. Let me take it to a different screen actually. Oh, actually no. Let me try to see if I can go to a different screen. Hold on. All right, cool. All right, you guys see my screen now? All right, so basically, like let's say now, let me draw it again. Let me draw this again. You have a resistance going up, resistance going up, going up, going up. And now you have a bearish trend coming down. All right, so now let's say now you have this. So if the resistance is being made over here, and you have a support now being made right here, let's say you have this now. So let's say this is a 1 hour time frame or something, right? If the daily is bullish, so let's say the previous daily looks like this candle. Like so, let's say down here, this is how the daily looks like right now. This is the previous daily candle, right? And now you have like okay, this is the so let's say this is the day before the daily candle, and now the daily candle is currently like this. It's currently just like this. So far, it's just coming like this right now, right? So if this is the current daily candle and it's still moving, it's still moving up and down, up and down, up and down. If it's still moving, and this is how okay, let's say this is the 4 hour now. This if the 4 hour looks like this, and this is the daily candle, what do you think the daily candle is gonna do? The daily candle looks like it's gonna come up and fill its wick, right? Same as the 4 hour candle, right? Because it's bullish. Why would it not go up? So if on a higher time from the daily candle, it's like more bullish, and you have like a couple bullish candles like this, like if you have prior candles to the daily coming up like this, bullish, why would it just now you can go on a smaller time frame, let's say the hourly time frame or 4 hour, whatever time frame it is, and say that now since we're tapping on support, all we need is a bullish candle at support go up now. Because now you say this is the bottom of the range, right? It's now you're saying you can start to anticipate a potential move coming up and then eventually breaking this range and breaking out of it right now. Yeah, so that's pretty much that's a little example of it. Pretty much you're just anticipating based off the higher time frame where it's gonna go because price didn't actually break resistance yet down here. It didn't break support. It didn't break resistance. So you, like when you have a range, pretty much like when you have a resistance being made, at the now you have support being made, which now makes it a bottom range of support. You now have a range, right? You're stuck in a range. So now when it's at the bottom of the range, you start to anticipate that if this candle is bullish at support, the next candle should respect the low, or should respect this low to continue to come up. And then eventually you can say that price is gonna break this resistance. It doesn't actually break it, but you could like have a runner or something, anticipating that we're gonna continue to break it. You can put if you enter here, your TP would be right here, and then you have a runner showing us that we're gonna go up further. So there's daily wick, and that's how you like incorporate different time zones into one trade. So there's that. Let me see if I could share my other screen now. All right. So what's that? So show how to find difference. We talked about that. Knowing which time frame to look at for a specific zone. So if I just mentioned that, so let's say the daily is that the how daily is bullish. If the day is bullish, you can now go on like the 30-minute or 1 hour during like your session openings or your session like for example like If the daily is bullish and we're not moving during London or Asian, maybe the next session we're gonna move at is pre-New York session. So during pre-New York session, which is at 6:30 for me, 6:30, 8 o'clock, before 8 o'clock, 8 a.m. You can go on like the 15-minute or a 30-minute time frame and you can just look for like what's happening. So let's say we have a range on the 15-minute, you have a range somehow. All you gotta do is wait for a break of that range to continue buying, to continue the move on the daily time frame. You start to anticipate that because the dailies then close at like during after New York. So New York's the last session that has a push, right? So you can start to anticipate that we're gonna move during that last session to continue to go up and to fill whatever daily it is, right? So as I just mentioned in the last part of it. So that's how you know what time frames to look at. It depends though. Like you can look at the hourly, you can look at the 30 minute, the 1 hour, just whatever looks the most clean. And like if you're comfortable with that stop loss, for example, like if the 1 hour stop loss is like 50 pips, I don't like a 50 pip stop. You can go in a 30 minute and you can start to anticipate smart things. Like for example, like if the hourly stop is like, how do I put this? If the hourly stop is like down here and it looks something like this, and like let's say you want to enter on this candle right here. Let's say your entry is here, right? This stop right here is like 50 pips. But if you go on like 30 minute, start of like, so let's say this candle opened up at 6 a.m. 6 a.m. on the dot, right? And then this candle's at 7 a.m. You wanted to enter on this candle right here for buy, but you don't want to have the stop loss. So what you could do, it's you can start to anticipate more things that can happen. So let's say this is 6 a.m. So let's draw this. Let's see how the 6 a.m. candle looks. Let me draw it again. What came up? I think it hit looks something like that. And then you have a bullish candle here. Have it closed. So this candle, this wick that I made was pretty much this wick right here. This body that I made bullish, it closed bullish, right? So the last hour, the last half of it closed bullish. So this is the first half 30 minutes, this is the second half, which leads up to the 1 whole hour candle, which is this one big candle. So that's what I'm trying to draw here. So let's say you want to enter on this candle now, right? So now we're starting a new candle, a new hourly candle. Usually when a new hourly or 4 hour forms, it makes a bigger pullback than the smaller time frame. So if this is a 30 minute, see the hourly forms here. So what's the first like time frame? What's like the what's the first time frame comes like what's the first candle of the hourly candle? It's a 15-minute, right? So if the first 15-minute time frame candle on this candle right here opened up and it closed bullish with a nice wick, right? Or what like whatever the low is, whatever this low is on the first 15-minute candle of this whole new hourly candle. Because like again, this candle did not close yet. It's still happening right now, right? So you don't know what the low is because it hasn't closed yet. You don't know what the official low is, but you can anticipate since it's the first 15-minute candle close bullish, you can anticipate that that's the low of the hourly candle. So you're anticipating that for price to continue going up, we should not wait. We should not break this low down here, right? We should just continue to go up like this to fill that, to make this out the hourly candle. So that's like looking at different time frames for specific zones. That's a little example of it, but like that's how you enter off of different times, right? So different times. Um, let's talk about knowing which are important and why. So, knowing which are important and why is basically if the daily is bullish and the 4 hour is bullish, what would you be most looking to take here? Obviously buys, right? You wouldn't be wanting to take sells because if the higher time frame is usually the small time frame builds up to the higher time frame. So if the daily time frame is bullish, the small time frame is most likely going to follow that trend, right? It's going to slowly lead up to there. Obviously you're going to see some bearish candles here and there, but obviously at the end of the day we're going to lead up to that bullish push that we needed, right? And like if the daily is bearish and the 4 hours is bearish, okay, if the daily is bullish and the 4 hours is bearish, then um what could happen is actually price could, Yeah, if the 4 hour is bearish and if one and daily is bullish, what could happen here is a price break structure on a smaller time frame can also lead up to the higher time frame. Like for example, if here, let me draw it out. If the 4 hour looks like this, if the 4 hour looks like this, right? And we currently have oh, wrong way. So let's say the daily kind of opens up like this, or actually draw one more. If the daily candle is coming up bullish here, and then all of a sudden you have a 4 hour candle that breaks the low, right? Since the 4 hour candle is the closest thing to the daily candle, the chances of it flipping on a daily is quite high now because the 4 hour is currently breaking the lows of certain candles. So if the 4 hour starts to continue to make lower lows here, then the daily candle will eventually flip bearish because there's only a certain amount of 4 hour candles in a daily, right? It's only like four. So I mean not four, six, 159, 159. So now if the day if this is the 4 hour candle, the daily would now look like this, right? Because open up bullish and then now it's coming bearish, right? Now if they're breaking the low, then this day kind of has a high chance of closing bearish and just continuing to close bearish like this. So it can go both ways. Usually when if the daily is bullish, the 30-minute and 15-minute will most likely build up to that daily candle. But if the 4 hour is if the 1 hour is turning, I mean the 4 hour is turning bearish, the daily will most likely come back and flip bearish after, because that's just the closest time frame it is to the daily. You know. The 1 hour, not so really, and not so much. It's mainly just the 4 hour and daily that just affects. It plays between the two, those two higher time frames, right? Same for the weekly. The weekly is bullish. The daily is most likely the 4 hour and daily is most likely going to continue up to the weekly level, right? If the weekly is bullish, the daily is mostly gonna. It's the same thing as saying the daily and the 4 hour. That's like saying the weekly and the daily. It's the same thing. Just the two closest time frames next to each other are usually what plays around each other a lot, right? For example, like the 1 hour and 30-minute. The 1 hour is going bullish. The 30-minute should just continue bullish, but the 30-minute starts to reverse. The 1 hour will end up reversing fully as well because two 30-minute candles lead up to an hour candle. It's a lot to take in, but it's just that's how you kind of just determine which are important and why. So now let me talk about. Actually, no, that's it for this video. I'm gonna be talking about on the next video. I'm gonna be talking about. I think I'm gonna be talking about. Let me see what I'm talking about. Next video, I'm gonna be going over understanding ranges. So that's what I'm gonna be going over in the next video. If you guys enjoyed this video, then take notes on it. I hope you guys enjoyed it.